Okay. Okay. So I have tried to find out more information related to this example. I think I have basically found out that in MASB illustrative examples for MFRS 15 for revenue recognition, I think there is a similar examples to it, the one which you have found in the books on example 7.4. So when I read that illustrative example, I think there are a few things. Maybe the information is not enough given in 7.4. So what I think I would better do today is, inshallah, I will basically refer you to that illustrative example which has been provided in MSB. Okay, my apology, I have not uploaded this. Inshallah, after the class, I will basically upload. Okay, so just refer to the document which I will basically share with you. Where is it? Wait, I have opened just now. Uh, I think this one. Okay. Can you see the document? Can you see the document?
Yes, sir.
Okay. Okay. So instead of going back to example 7.4, because I think as I read through the example, I think there might be some information which is missing. So I have tried to find out more. I come across this example 40 from MSB MFRS 15 illustrative examples. Okay. So if you look in, is it okay? Are you okay? Can you hear me?
Can hear, sir.
Yes,
Okay.
sir.
Yes,
Because I
sir.
hear some voices, I just hope everything is fine. So if you look into this, I think you can also, if you want more illustrative example, you can also go to MASB illustrative example for MFRS 15. So if you look into example 40, it's almost the same issue as what has been explained in example 7.4. Okay. So if you read through, an entity enters into a contract with a customer on 1st of January 2000, I just says 2019, to transfer product to the customer for CU is actually a usual monetary unit used in standard. Okay, so like ringgit Malaysia 150 per product. Okay, so like example 7.4, if customer purchase more than 1 million of this product in one calendar year, the contract indicate that the price per unit is retrospectively reduced to ringgit Malaysia 125. That means from a standalone price or from the initial price of 150, it will reduce to 125 if customer purchase more than 1 million unit of this product. Consideration is due when control the product transfer to the customers. Entity has unconditional right concern to the consideration of ringgit Malaysia 150 per product, because this price reduction will only apply, okay, so before customer reach a purchase of 1 million unit, the entity still have a right for a consideration of 150. Okay, so and this will basically apply until, okay, a point when the customer have basically purchased 1 million unit of product. where at that point, then the price reduction will be done retrospectively. Okay, so the company have basically an assumption that the customer will meet this 1 million threshold and therefore estimate the price at 125. Okay. So, however, of course, they will basically initially recorded that they have the right for 150. Okay. However, due to their assumption that the customer will be able to meet, then they record their revenue only at 125. Okay, only at 125. So because of that, the difference of 25 ringgit is actually recognized as a liability, okay, by the company, and this is basically stated here as refund liability. So for example, when the first shipment, okay, to the customer, let's say the first shipment is 100 product, then the entity need to recognize receivable. They're still recognizing it at 150. Yeah, at 150 because that is their right until the price reduction is basically given. Okay, the revenue is recognized at 125 because company have an assumption that the customer will be able to meet this 1 million threshold, and because of that they recognize the difference of 25 ringgit as a refund liability. Okay, as a refund liability. So this is how you should record. Okay, you should record. So once the customer reach the 1 million thresholds, then the company will refund 25 ringgit per unit of the product back to the customer. So that is how you record. You will only make a refund. Okay, you will only make a refund when the company reach the 1 million threshold. If then there is a question. Okay, there is a question last class on Monday. If customer have not reached that 1 million threshold, if customer have not reached 1 million threshold, then of course companies have a right for 150, and that refund liability now will be transferred into a revenue. That means you will close your refund liability because company will not have any more refund liability since the customer have not reached the 1 million threshold. Okay, so company will receive full 150 payment per unit, and you will increase your revenue from just recognize at 125, you will recognize it at 150. So that would be the illustration lah. Cannot remember who are basically raising the issue last class on Monday. Is that clear to those who have raised this issue, particularly lah, and for all the other students with regard to these issues? Is that okay now? Any further issues? Is that okay, sisters?
Okay, sir.
Is it explain your concern last class? Okay. I'm not sure. I don't remember who asking the question. Actually, I also not so sure how to basically trace who are basically asking the question. I hope this example will clarify the issue on example 7.4. Okay. So now we continue our discussion. Okay. The next issue is basically with regards to I think we have go to example 7.5. Okay, example 7.5. Maybe there are one more example here with regards to transaction price, which is example 7.6. Yeah, maybe we can look into that examples. Let me just go there. Okay, 7.6. Okay, 7.6 is where you have a package, okay, sort of a package or a bundle of product in one of the contract. For example, here is a common situation. For example, when a company offer to customer with regard to telecommunication services, so you offer, one is the equipment, and second is the service. Okay, the services, the telecommunication service. Okay, so if you purchase it on a standalone, individually, the cost of handset will be 1,800. The telecommunication service for 2 years, assuming that per month is 60 ringgit, that's mean per year it will be 7,200. 60 times 12, 60 times 12, how much? 720. Okay. Uh,
Yes.
60, 60 times 12 is 720, 1 year. So for 2 years is equivalent to 1,440. So on a standalone prices, yeah, the cost will be 3,240. However, of course, if it is purchased as a package, then the cost is only for both is only 2,500. So in this kind of a question, of course, you need to allocate. Okay, you need to allocate the price into the two separate obligation. Okay, the two separate obligation, because the first obligation is delivery or transfers of the equipment. Second is for the company to provide the telecommunication services for 24 months. Okay. So as a package, the price is 2,500. Therefore, if you want to allocate how much is the price for the equipment and how much is the price for the services, then you can use the standalone prices as a basis to allocate. Okay. For example, if you look into the table to the bottom of the page, okay, so the standalone price of the handset is 1,800 multiplied by the total standalone price, divided by the total standalone prices of both, which is 3,240. Then you multiply by 2,500, that is equivalent to 1,389. Okay. Then the second is basically the telecommunication services. You apportion accordingly again on the standalone prices of the services provided to the customers. So the amount is 1,111. Okay. Then, of course, the price related to your first obligation to provide or transfer the equipment to the customers. So you were able to recognize that once you give the control of the equipment to the customers. In terms of telecommunication services, since it is for 2 years, that's why you can divide it by two. So at the end of the first year, you will recognize the revenue for the first year, since you have satisfied your performance obligation, then you will recognize another half in the second year. That is basically what is shown in the next page. That is how you recognize the revenue when the contract consists of several performance obligation, and the price come as a package. So that's why you need to allocate and then allocate it appropriately in the relevant year for the recognition of the revenue. Okay, so that is another example with regards to transaction price. Okay, and I have basically says that in example 7.7, that is just shows that you can also include the interest. Okay, if that loan which you raise is particularly for providing the services to your customers, any interest incurred for that loan is can be included into the price, okay, of the transactions. Okay, so that is issues with regard to prices. And last but not least is the final step is company can recognize the revenue when it have satisfied its performance obligation. Just one small issue before we move to other matters. Okay. So if you look into page 183, there is a discussion of contract costs. Okay, there is a discussion with regard to contract costs. Okay, so if you look into the discussion of contract costs, there are two types or categories of contract costs. One categories of contract cost is a cost which you need to incur in order to obtain a contract. Okay, in order to obtain a contract. So the issue with regard to this cost, this is an additional cost, okay, which you need to basically incur in order to obtain a contract. For example, in order to obtain a contract, you might need to engage a lawyer, okay, a lawyer, okay, in, for example, writing the contract, for example, because without lawyer documentation, there might be some problem with regards to the um, what to the official, okay, with regards to the uh, how do I say, the word doesn't come to me, okay, in order to ensure that, okay, the contract is basically legal, okay, therefore you need to engage a lawyer, and therefore you need to pay some legal fees to the lawyer. So that is usually looks like it's very common, okay, in any contract you might need to engage a lawyer in order to um, the legality, in order to establish the legality of the contracts. So the issue is, this contract, should you just expand it off in your P&L, or should you basically capitalize? Capitalize here is basically deferred, okay? So should you expand off in P&L, or should you defer the recognition of these expenses? Okay, that means you don't recognize the whole amount immediately in your P&L as an expenses, but you will basically allocate the expenses over the period of the contracts. Okay, so that is what we mean by capitalizing here. Okay. So usually we understand that you can basically capitalize, but um, of course, there is certain requirement. First is, of course, it must be related to obtaining a contracts. Okay, securing the contract. It must be related to securing the contracts. Second, the criteria is you expect to be able to recover those costs, legal costs which you have incurred. Okay. Sometimes this recovering of the cost might have been explained. Okay. Might have been explained or determined by law, for example. Okay. So whenever you want to write a contract between the seller and the purchaser, the legal cost, for example, the law says, for example, okay, this is, for example, I have not checked, okay, might be the law says that legal cost in the sale and purchase agreement should basically be bear, okay, by the purchaser. So that's mean you can always ensure that you can recover the cost, okay. Sometimes, if you look into the further discussion over there, sometimes you might not be able, okay, sometimes you might incur legal costs, but finally you are not able to secure the contracts, okay, to secure the contract, because not all, okay, initiative which you have undertaken would lead towards securing the contracts. The standard will allow deferment or capitalization if you can always recover. That's mean, for example, if you can always charge it to the other party, okay, this cost, then it can still be capitalized. If not, then of course you need to expand it off in the financial statement. So that is the first cost, okay, cost incremental of obtaining a contracts, okay. The second one is basically cost to fulfill your obligation, okay, cost to fulfill the contracts. Sometimes you might incur additional costs, okay, in order to fulfill the contracts. If this cost can be capitalized in a specific asset standard, for example, like inventory, that is MFRS 102, or capitalize, for example, you're constructing a plant, a factory building, for example, that is plant property equipment. So that's mean you can capitalize the cost in under MFRS 116, or you can capitalize the cost under 138, which is intangible. Then you capitalize it under the appropriate standard. However, okay, however, of course, if it cannot it cannot fall under 102 or 116 or 138, the cost can still be capitalized. Okay, and again, of course, the main condition is must be related to the contracts. Okay, and is you expect a recoverability of such costs. Okay, if not, then of course you need to expand it. Or for example, you need to, in order to fulfill a contract, you might need to provide some modification to your equipment. Yeah, so this is some cost which you need to incur. You have the machine equipment already, but maybe there are some unique specification which you need to fulfill. Therefore, your machine need to be improved or modified. So such costs, yeah, can be capitalized, can be deferred and recognized or amortized into the contract period. Or sometimes you might need to incur or employ additional part-time staff, for example, in order to fulfill the contract. Such a cost can also be capitalized. Yeah, so that is some issue with regard to contract costs. So you might incur some other costs in obtaining or fulfilling the contracts. So the issue is, should you capitalize it or should you expand it off? The criteria for capitalizing is, of course, first, it must be directly related to the contracts, and the second one is issue of recoverability. Okay, issue of recoverability. If this condition or criteria fulfill, then you can capitalize. If not, then those costs need to be expensed off in your profit and loss account. Okay, so that is some additional issue with regards to revenue recognitions. Now we move to other revenues issues. This is just some other additional issue which might have been raised, okay, by those who have an interest in this issue of revenue recognition, either the researcher or student or scholar in accounting. This is some additional issues which have been discussed related to revenue recognitions, okay, with regards to revenue recognition. So I think in the slide is start with a gift card. Okay. However, of course, I think if you look into the books, the first two issues, the first two other revenues issues is actually related to issues of constructions. Okay, issues of construction contracts. Okay, so you have a construction contract. You are developing, for example, like houses. Yeah, so you have a construction contract with your customers. There are two issues which have been raised in your textbook, chapter 7. The first issue is this issue has been long debatable among scholars on those who are relevant in practices, whether you should basically use percentage of completion method. Okay, that's mean you're following the pattern of completion of the construction, or you are using you only recognize the revenue at the end of the contracts. Okay, at the end of the contract. So this is a long debatable issue among practitioners and also scholars, and we understand that construction contract might take long period of time, like years. Okay, like for example 5 years or 10 years. Okay, I think the practices in Malaysia is always to use a percentage of completion method. Okay, but of course the issue when you want to justify percentage of completion method, how do you identify or indicate the transfer of control? Okay, the transfer of control from the company to the purchaser or to the customer. That is a very difficult issue to basically justify. Okay, to basically justify. So if you looks into the discussion in the textbook, as long as you can basically justify that the construction of the abstract is basically for the purpose of that customer, there is no other objective of constructing that, for example, house, then it basically would allow the use of percentage of completion method. And of course, another criteria is entity should have an enforceable right, okay, for the payment for the performance obligation which has been completed. So if that could be met, then the standard will allow the use of percentage of completion method. If not, then you need to use uh, um, end of the completion of your construction as the point for recognition of revenue. The second issue we have been raised is if you are constructing a building, then you should incur also costs with regard to acquisition of the land. Should the cost of acquiring the land be included? What has been discussed here, um, I think is very probably that you should also include the cost of the land into the cost of the construction, because uh, it might be almost impossible. How would you construct, okay, a building if you don't acquire a land? Okay, so the cost of the land could also be included into the cost of the construction. So that is the first issue. The first other issues, some issues related to revenue from construction contracts. Some other issue here is with regard to the gift card. Okay, so to the gift card, for example, company might sell gift card, so purchaser can give that gift card to some other person. Okay, a purchaser purchase a gift card to give it as a gift to another person. Okay, so as a gift card, when the company sell the gift card, then it need to recognize it it liability. Okay, it liability. Okay, so once a person who have received the gift card redeem, okay, redeem for the gift, either it is a good or services, and then only the company can recognize a revenue. Okay, so once the gift card is sold, company need to basically recognize a contract revenue. It can only be recognized as contract liability. Sorry, one use company sold the gift card, the entity need to recognize a contract liability. It can only be recognized as revenue when a person redeem that gift card from your company. So that is another issue. The third issue is with regard to warranty. Okay, warranty. And in terms of warranty, I think it is also quite common practice now. For example, if you go and buy some electrical products, okay, at the electrical shops, usually electrical product will always come with a normal warranty, okay, normal warranty like 1 year or 12 months. So this normal warranty come with a purchase of an electrical product. This is what we call assurance. Okay, assurance. In order to assure that the product which you have sold is in a quality. Okay, in a quality. That's mean in 1 year, usually it will not defect. And this is an assurance, which the assurance warranty come together with the purchase of the electrical products. However, I think now it's common. Whenever you buy, then the salesperson will ask you, do you want to purchase additional warranty? Okay. Do you want to purchase for additional warranty, like additional 2 years? Okay. Service warranty, for example. This is what we call purchasing additional services. This is what you need to differentiate. If it is an assurance type of warranty, then you need to follow the appropriate standard, which is MFRS 37. on provisions. Yeah. If you purchase for an additional services from the company, and then it might come under this standard. Okay. Because when you purchase, okay, additional services, okay, then the company have an additional contract liability. Okay. Additional contracts liability, then it will be able to fall under MFRS 15. Okay. So that is with regard to warranties. Some other additional issues, non-refundable upfront fees. So sometimes whenever you have a contract with your customer, you will have some deposits, okay, or upfront fees, non-refundable upfront fees. What you need to identify is this non-refundable fees relate to a separate performance obligation, okay, or would this non-refundable fee is just an advance payment, okay? So if it is an advance payment, then you can only recognize it as a revenue when you deliver the products, okay? If it is an advance payment, then of course, these upfront fees which you receive at the date when you receive the cash cannot be recognized as a revenue yet. Okay, it can only be recognized as a revenue when you perform, okay, or when you deliver the good or providing the services to your customers. If this related to a separate performance obligation, then you need to look what is that separate performance obligation. For example, you might ask some down payment, for example, because you need to prepare the site, okay, before the equipment is basically delivered. So this might be a separate obligation. So once you complete preparing the site, so then you can already recognize the revenue from this upfront or advance payment. Yeah, so it's a separate from the delivery of the equipment. Okay, so that is with regard to non-refundable upfront fees. The next issue is repurchase agreement. Okay, repurchase agreement. For example, you sell an equipment to a customer and you put a condition that you will buy it back. Okay, you buy it back. So how would you, okay, how would you treat such kind of a repurchase agreement? Okay. I try to find out some further information on this because I myself initially not so clear about this. Okay, so I have come across. Yeah, let me just share with you. So this table, I'm not sure whether it is clear to you or not. Can you read it? Inshallah, I will also upload this document. Okay, can you read this? Silent. Can you read? I think. Can you read? I might
Yes,
have a
sir.
problem. Okay, because of my age. Now I have problem reading a small um, letter. So that just would remind me to remind you. So for example, in exam, please write it clearly because I might have problem to basically read a very small letter. Okay. So it can come, for example, that repurchase can be, as what have been stated in your note, it can be a forward, it can be a call option, it can be a put option. The only difference between forward and call option as one group and the put option is basically who requests, who have the right. Okay. So in the put option is actually at the customer request. Okay. For the company to repurchase. Okay. For a forward and a call option is actually the company itself. Okay. Put a condition that it have a right to repurchase. But for a put option, it is at the customer request for the company to repurchase. Okay. So the basic idea here is to, in order to provide an additional guideline, okay, of how company would treat a repurchase agreement, you will need to look into the repurchase price. Okay, repurchase price. I just sum up a conclusion from this table, and I will also upload this table. Okay. Generally, if the repurchase price is lower than the original selling price, okay, you need to treat it as a lease. Okay, as a lease. So that's mean if the repurchase price is basically lower than the selling price, then you need to use MFRS 16 on treating this repurchase agreement. Okay, so that is one issue. The second is if the price is equal or more than the original selling price, yeah, then you need to treat it. If the request is from the company itself, then you need to recognize it as a financing agreement. Okay, financing agreement, that's mean it will fall under financial instrument. Yeah, a financial instrument. Okay, because you will recognize that as a part of financing agreement. Okay, so that if the exercise price is equal or more, and it is at the request of the company. Okay, at request of the company. However, okay, if this at the request of the customers, it can either be financing if the repurchase price is less than expected market value. Okay, but if the repurchase price is more than expected market value, then it is just like a normal sale. Okay, a normal sale where you have the right to return it back. Okay, to return. For example, like in some sale agreement, you have the right to return, might be because of some issue like condition of the asset and so on. Okay, so I think this table which I have come across, I think have summed up the issue related to repurchase agreement. Okay, uh, the next issues. Okay, the next other issues is basically on license, repurchase agreement. License, license is intangible asset. Okay, license is intangible asset. Sometimes we might call like intellectual property. Okay, intellectual property. So if you have, okay, if you have revenue generated from a license contracts, there are some issue discussed by scholar, because when scholar discuss of intellectual property, okay, intellectual property is always about the right. Okay, so the purchasers have. Okay, so when they discuss about intellectual property, there are two issues. Is this license give a right to use or a right to access? Okay, right to use or right to access. So of course, by just looking into that term, I initially also don't understand what is the difference between right to use and right to access. Okay, so I need to dig further, read further. Okay, so I might give you a simple example of license. Okay, simple example of license in technology companies is like software. Okay, it's like the software. Okay, software. So this issue of software sometimes might be very complicated, multi-layered, and so on. So how would you differentiate between right to use, okay, or right to access? Okay, so a right to use software is a software when a purchaser purchase it, it can just, okay, it can just use it immediately, and the seller does not have any further obligation toward, okay, the use of that software. That's mean no further obligation. That's mean when the purchaser purchase the right to use the software, the purchaser can basically immediately use it without much problem, and without much problem, and there is no further obligation of the seller toward the software. if you are expecting, okay, if you are expecting the seller, okay, to substantially, okay, maintain or change or update the software, this is what we call right to access. That means the seller will still have an obligation because it's not something a software which is readily available to use, and it require a lot of substantial intervention or maintenance or um, further involvement of the seller in the usage of the software. So that is what we call right to access. So of course, when it is right to access, okay, the scholar says that recognition of revenue need to be recognized over time. Okay, over time. It cannot be recognized at a single point of time. For example, at the time when you transfer the control to the purchaser. However, if it is a right to use IP, and then you can recognize, okay, you can recognize the revenue at a single point of time. Usually, we will look into the point when the seller transfer the control toward the purchaser. Okay, so that is issue related to license. And the next three issue, actually, this is the topic which I will discuss it in much more detail. Okay, in much more detail in our next class. Okay, in our next class. So the next three issue: customer loyalty programs, then material rights and renewal option. I can say that although you have three terms here, okay, customer loyalty, material rights, and also a renewal option, I can lump up all these three categories as what have been as what has been put into your slide as an issue of a material rights. Okay, all this customer loyalty is also an issue of material rights. Okay, for example, okay, for example, you says as a customer loyalty programs, you can says if you purchase, okay, for example, if you purchase two pairs, okay, or two piece of shirt, okay, or customer loyalty, no. For example, customer loyalty, for example, like points, okay, points. When you purchase a certain amount of good, you will get a point, okay, a point. And for all the points which you have accumulated, okay, accumulated, for example, each point will entitle you for 1 ringgit discount, for example. Okay, for example, that means when you purchase when you do a future purchases, then you can get a discount from a point which you have collected. Okay, so this is an example of a,
Nasib baik aunty ingatkan.
huh?
Ada.
Any, okay. Sorry. I think I heard a voice. I'm not sure whether you might have not muted your audio. Might be. Okay. So this is an example of a customer loyalty program. So the issue of material right is for a customer who already have a contract with the company. Okay. So it might get, for example, future further benefits. Okay, further benefit from the contract, which might not be able, okay, for the other people to get it, okay, without having that contract. So you need to differentiate. So for those who having this contract, it can get some future benefit from the contract itself. For those who does not have a contract, might not be able to enjoy such a benefit in the future. For example, like renewal. Okay, you have another category called renewal option. So if you already have a 12-month contract, okay, for example, in telecommunication services, then the service provider will say, if you renew for another year, you will be able to subscribe at a lower price. Okay, so this is material rights. Okay, so the initial price might be per month is 60 ringgit per month. When you complete the first year of the contract, you can renew for another year at the price of 40 ringgit per month. That means you can get at a reduced price for the telecommunication services. This is an issue of material rights. So how would you recognize, okay, how would you provide a proper accounting treatment with regards to material rights? So inshallah that one I will discuss with you in our next class on Monday. So the last issue there, if you look into your slide, customer loyalty, material rights, renewal option. I will discuss it further on Monday. Bill and hold is another kind of a transaction which sometimes happen in the business industry. Sometimes it also happen in the government agencies. Bill and hold is you might have, for example, you might have completed constructing an asset or a building. Okay, so you bill. Okay, you bill your customer, but you still hold on the physical possession of the asset where the transfer of this physical possession could only be done later. So the issue here is, uh, can you recognize the revenue at the date of the billing, or could you recognize the revenue at the date when the physical possession, okay, is transferred? That's mean at the later date. So of course here you need to, there is some subjectivity here in defining whether the transfer of the control, okay, have basically happened, because sometimes might not need transfer of physical possession, but if already have a control on the use of the asset, and then you might basically start recognizing the revenue. So in the bill and hold, the issue is the billing date is at one date. Okay, the transfer date will happen at a later date, so you might have some issue to basically decide it when does a control happen for the company to start recognizing the revenue. Okay, so that is basically just some additional issues which might have been discussed by scholar related to revenue recognition. So I think that is all for today, because I plan to discuss material right by itself. Okay, material right by itself on Monday, and I will give you a much more detailed example related to material rights. Okay, so I think that is all the slide, and of course you, as usual, this is only from my perspective lah. Okay, I usually don't discuss much with regard to disclosure requirement. Okay, of course, in disclosure requirement, okay, it will basically, in any standard, there is a disclosure requirement because information related to such a transaction might be important to be disclosed. But of course, why I have not discussed much, because I don't want you to memorize this. Okay, so this one you can always refer to the accounting standard. So of course, what is important here, I think we have also discussed about integrated reporting. Now information is not only subjected to numbers or figures, some explanation or qualitative information might also be important to be disclosed. For example, here we're talking about contract with customer, okay, changes in, for example, the contracts, okay. So uh, for example, here, any asset recognized from the cost, okay? So how would you recognize the cost to obtain or the cost to fulfill a contract with a customer? This is among the important information related to this MFRS 15, okay? So I think that is what I have planned for today. Unless, okay, so I will open if you have any question you would like to ask. Okay. Any further question you would like to ask, brothers and sisters? Any questions? Are you okay?
No
Let
question, sir.
Okay. Let me look into the chat box. Okay. Okay.
Sir,
Yeah. Yeah.
regarding the determining transaction price, right?
The
This
remaining.
is on
Okay.
the first class.
Uh-huh.
Um, for variable consideration, the example is discount, right? How is
Yeah.
that will increase the transaction price?
Yeah.
How
I
is
thought.
discount?
I thought that is also a mistake because I thought it should basically decrease. Okay. Because discount
Yeah,
will.
but
Uh,
because
I
the
think that
textbook also say that that
increase
will increase the transaction price. Yeah, the only thing
because
that decrease it
I need
is the
to check
consideration payable to a customer.
because whether it can be plus or minus, because if it is a discount then the price will basically become lower. So I think if it is a discount, it I think it's correct to say it is a decrease, but the variable consideration might not just related to discount. Okay, might not just related to discount. So initially what I have thought, it can be either plus or minus. Okay, plus or minus. But I think with regard to discount, my understanding it will be a deduction. Okay. Some variable consideration, for example, might be, for example, like uh, if you need to incur some. I'm not sure.
Pen-
This one I just
Penalty.
tried. Okay, I just tried to dig from, because we need to look into what are possible variable costs. Okay, what are possible variable costs? Some variable costs might increase, for example, because of certain reason. Okay, because of certain reason, it might basically increase. Okay, for example, here, if you look like maybe issue of penalty, I'm not sure. Okay, but when you look into discount, I think discount will basically reduce, okay, the price. So I think it should either be positive or negative. Okay, that is when I first initially look into the formula. I also have some question. Okay, because when we focus on discount, it might be negative, but maybe, inshallah, I will confirm again. But that is basically my first feeling. It can either be add or deducted. Sisters, it can
Okay,
either
sir.
increase or decrease the transaction price. Is it okay?
Okay.
Okay. But
Inshallah.
okay,
Thank you.
okay. But inshallah, I would try to find further. But that is, I think that is my understanding at the moment. So I just forgot to basically highlighted that. Okay. But I will inshallah make sure again. Okay, my explanation. Hopefully, it will not lead you to a wrong conclusions. Is that okay, sisters?
Okay, sir.
Okay. Any other questions? Any other questions? Okay. Not sure.
Sir,
Yep.
there is one in the chat, I believe.
There's one in the chat.
Yes.
Oh, what does it mean by company can recover the cost? That's mean the cost, okay, the cost which they incur, they can basically get back lah, the money for the cost. For example, the legal fees, they might need to pay it first, but then they can charge it to the customer, so the customer will basically repay back them. That is what is meant by recover. Okay, recovering, as I said to you earlier, it might be because of the law's requirement. Okay, for example, but I have not checked. Okay, might be because of the law which required that they might have paid it first. Okay, but then they can recover it back. Okay, that's mean they can get back whatever payment which they have basically incur. So the simple example as legal cost. So if they can basically charge that to the customer, then that is the meaning of recovery. Is it okay? If not, then that is the cost which they need to just expend it off. This means the whole amount which they incur and they cannot recover it, they need to basically just put it into their expenses as a whole. Okay, as a whole. Is that okay, brothers?
Yes, sir.
Okay.
Thank you.
Any other questions? Long way for Monday and Wednesday. My class is only at 5:30. That is my only class on Monday and Wednesday. Need to wait until the evening, then only have the class where your might be your motivation is not so good already because it's too late. Okay, in the evening. But what to do? Okay, that is the best arrangement which we can have regard to this class. So if there is no further question, okay, I think I will end here. And of course, you can look again into the slide. Okay, I will try to upload some additional document which I have used for today's class, so you can look again. So if there is any question, then inshallah you can ask me on the next class on Monday. Okay. So I think that is all for today. Okay, thank you very much for all for your attendance, for your participation, asking question. So inshallah, I will meet you again on Monday. Thank you very much. I end my class today by Assalamu alaikum wa rahmatullahi ta'ala wa
Thank,
barakatuh.
thank you,
Thank you.
sir.
Thank you, sir.
Sir.
Thank you,
Thank you,
sir.
sir.
Thank you,
Thank you, sir.
Thank you.
Thank you, sir.